Welcome to your weekly market update. We have good news, we have bad news. What is the good news? What the Fed has been doing in increasing interest rates is working. Inflation has come down. Unfortunately, they look at previous data and their timing is about a year off, unfortunately. I'll prove it to you in a second. And just to really prove my argument, they did the same thing in 2021. They continued to stimulate the economy when it didn't need to be. They continued to keep interest rates at record lows. Now, listen, I benefited from it immensely. Many in my industry did, but it was the wrong move overall for our economy. That is what has caused this inflation. There was signs of inflation far before they started increasing rates, far before they stopped buying their own mortgage bonds to stimulate the economy. And they're just late in this data. My friends at MBS Highway, which I highly recommend, use the analogy. They're always looking in the rearview mirror. They don't even look out at the side windows, and they're definitely not looking in the windshield. So we started to hear a little change in their tone at last meeting. The next meeting's December 12th through December 13th. We hope they acknowledge that this is coming down. And if they look at the current information and not the yearly lag, they will see that's absolutely the case. Shelter makes up 44% of the overall inflation number. I've talked about this all year. Shelter is made up of a lot of things, but rents are part of that. And when you factor in that leases are a year, right, and they were written in 2022, and then this data, this lag, is a yearly average, you get a problem of some of this information being a year and a half old. So when you factor in that year over year, we're at 4%, right? And they're looking at a yearly average of 6.7. Real time, we're at 2.6. There's 4.1% difference between the yearly average and where we're currently at. If you take that 4.1% and multiply it by 44%, you'll see there's a 1.8% lag. So their real-time CPI number should be at 2.2%. Their target's 2%. So they're already almost there. Unfortunately, it is causing stress in the job market. There's a report that just came out that credit has tightened to an all-time low since 2013, that 60% of people said they don't even have access to $2,000. That's a problem. So hopefully they see this. The good news is in recessions, interest rates always come down. It's happened all 16 times in the last 60 years that there's been a recession. And once again, 15 out of those 16 times, real estate values stayed the same or went up. Real estate performs well through the recessions, except the financial crisis of 2007, which we all remember. So we relate recessions to home prices going down. It doesn't happen. Let me prove this point to you even a little bit further. This is inventory, right? So it's down 4% month over month to 3.79% annualized. That is closings, existing home sales. That's down almost 15% this year. So we're down quite a bit in home sales. So people think that the real estate market slowed down. It's not. It's because of inventory. You can see that home prices, although down month over month, which is typical for the fall, we're still up 3.4% year over year. Every single housing measure of home prices have 2023 as a plus year. Home prices have went up in almost every market when you look at it over the whole year. Inventory is still very, very low. 1.15 million. That's down from last year, 5.7%. Supply is at a 3.6 month supply. Normal is 4.6. Time on the market is 23 days, up a little bit over 21. 66% of properties are sold less than 30 days. First-time home buyer activity, despite the highest interest rates in 16 years last month, was only down 1%. Cash buyers stayed the same. Investors, which is the canary in the coal mine, usually these are savvy real estate investors that have done this many, many times, that activity's up. Bids per home sold is up. The market is trending up. When the interest rates come down, which will happen next year, you're going to see many, many buyers come to the market. Those of you with low down payments may get your offers pushed to the side like happened in 2020 and 2021. If you have VA and FHA, unfortunately, many people look at those as more difficult loans and they go with the conventional loans or cash buyers or massive down payments. So now is your time if you have low down payments. Now is your time to negotiate. It will be gone by January, February at the latest. So thank you for watching this weekly market update. If we can help you find the property of your dreams, DM us or give us a call, 312-731-4939. Once again, 312-731-4939.